I think that'd be pretty damn cool. There's also long volatility via deep out of the money calendar spreads. There's another option here. Trend following managed futures ETFs. Okay, managed futures replication ETF. Yes, I've seen these before. Let's actually take a look at some of these ETFs I was talking about that could potentially make money in a downturn. Okay, so here's managed futures strategy ETF. This one's actually down today. I would have expected if this is an ETF that's supposed to make money in a downturn, it should be up today. For some reason, it's not up. So for that reason, I'm already against it. Let's take a look at another one. The next one here, KMLM. This one's also down today, but it's not down too much. So sure. But really not doing very well over a long-term basis. Even when we had that big drop earlier this year, let's see how it did in that time period. Because around March, we had this big drop. So it actually did make money in March. Look at that. It did have a nice big jump, but it's been mostly on the downtrend. I don't know if I'm too crazy about this one either. Let's take a look at this one. It's really hard to make money on the way down. I've always noticed that. If you guys have any good strategies that make money when the stock market falls, I'd be very interested to learn about what you guys are doing. Here's what is this ETF? This actually looks kind of interesting. Return Stacked US Stocks and Managed Futures ETF. What does that mean exactly? Let's actually research what this thing does. RSST. Return Stacked US Stocks and Managed Futures. RSST. Where's the description? I don't see a description of what it does. Okay, the fund is an actively managed exchange-traded fund that seeks to achieve its investment objective by investing in two complementary investment strategies, a U.S. equity strategy and a managed future strategy. Under normal circumstances, the fund will invest 80% of its net assets plus borrowings from investments purposes. Okay, more. Let's read more about this. What is this managed futures thing? What does it talk about? Managed futures, how? Right? In U.S. equity strategy and B, the managed future strategy. The fund is non-diversified. Okay, but it doesn't really explain what it does with these managed futures. What kind of managed futures are we talking about here? Right? There's really not a lot of description about that. Let's see. Is there? There we go. Here's a return stacked. Why invest in RSST ETF? For every $1 invested, RSST is designed to provide $1 of large cap US equity exposure and $1 of a managed futures strategy. Okay. What is that managed futures strategy, though? Da-da-da. Diversification, inflation, hedging, with the ability to go both long and short global futures markets, including equities. Managed futures has historically exhibited inflation hedging characteristics. Okay, so it's meant to hedge against inflation. And two complementary investment strategies, a U.S. equity for every da-da-da. Okay. As capture total return, okay. The managed futures strategy will invest in a trend-following strategy in futures contracts among 4 asset classes: commodities, currencies, equities, and fixed income. That's actually very interesting. It's a trend-following strategy. We're actually, by the way, we're adding in futures into our platform. So I think maybe next week we can actually work on a future strategy as well, which I think would be pretty damn cool to see a future strategy running. We have futures actually almost fully working on our platform now. So it'd be really cool to see that. You lose all, okay. Yeah, so understand that. Okay, great. Let's take a look at our strategy. Is this thing running yet? Okay, looks like it's running, and it purchased. Okay, so purchased CCJ and HIMS. There we go. Those are the 2 stocks or 2 options that's supposed to own. Great. And then let's take a look at where we're at with the VIX. Where's our VIX here? VIX is over 21 now. Officially over 21. So if it stays that way, it's actually going to sell these quite soon. So we'll see. I don't know if it's going to check again tomorrow. Let's actually ask the AI. Um, so how often does it do this check for the VIX? Is this something that gets checked daily or several times a day? Because the market actually just crossed 21 for the VIX. We're officially above 21 and it has not sold anything yet. So how does that VIX check actually work? Okay, the VIX check is performed on each trading iteration, which is run once daily. Okay, so tomorrow, presumably, if the VIX is still above tomorrow, then it's going to do this sell. It's called an on trading iteration. If the VIX is above, the strategy will log that the VIX is active, force exits on any open positions, and skip any new entries. Trading will resume normally once the VIX drops back below the threshold. So if the VIX is still above 21 tomorrow, which it's above today, then it's going to actually exit these positions, right? So in terms of round trips, I just want to make sure that here, so how does this PDT work? So it's basically 3 is fine, but 4 gets my account suspended. Is that what happens? Okay, you're allowed 3 day trades in any rolling window. Okay. So is it still considered a day trade if I bought the securities today and then they get sold tomorrow? Or is that fine? Is that not counted under the PDT rule? Okay, so buying today and selling tomorrow is not considered a day trade. Okay, so we're actually fine here. So I don't have to worry about this. So we bought CCJ and HIMS. We own that right now today. And then tomorrow, if the VIX is still above 21, it should sell this and exit out of these positions, which I think is actually a very good idea because, like I said, we're entering into that correction territory. Okay, great, perfect. Okay, so we got our strategy running. Now let's talk about our next strategy. I want to take a look at this strategy here where what we can do is actually make money on the downturn. So we have this here where I think what would make sense, like what I would like to do is I would like to, and I've actually thought about a strategy like this for a while now, um, where we can own a leveraged asset, something that does very well. So I'm thinking about a strategy that I think this will work very well in a market downturn. This is what I think, right? And again, not investment advice, but what I think would work well is if we own TQQQ, which is a very well performing asset in most situations, but does not do very well on downturns. And then we add on a put spread, right? So make a strategy that owns TQQQ in most situations. Actually, no, only owns TQQQ if it's above the 200-day moving average. Okay. If we're below the 200-day moving average, or actually, no, let's do this. I'm gonna combine 2 of our strategies. One of my favorite strategies is owning TQQQ if we're above the 200-day moving average. I like that by itself. But what we could also do is have this thing always own a put spread, right?